So I enrolled for a technical analysis course, and I did, and I loved it that time. And it seemed like, if this is how money is made, then why are people working? Maybe they don't know that this exists in the world. So the initial 5-10 lakh rupees was spent just for learning
purpose, like tuition fees to the market.
Like tuition fees to the market.
Okay.
And the only important part is that you accept the feedback that the market gives you. Like you lost those 5-10 lakhs, but if you didn't learn anything from it, then it is not tuition fee.
Correct. Agreed.
Or if you feel like it was your bad luck because of which it didn't work out, then you're going to lose more.
Correct.
Eventually also, because you did not take ownership for it. My family suffered a very big loss in 93 during the Harshad Mehta scam at that time. So everybody had decided that we won't be in the stock market forever. Like we're never getting into the stock market. At least trading we're never getting into. Then I was focusing on tips and rumors, but I was never focusing on position sizing. Even if I followed that tip and rumor and the position size was kept to a decent proportion of my portfolio, I wouldn't have blown up 70% of the capital. Every year it gave me 25 to 30% return, and in the next 3-4 years, the capital turned from 1.5 CR to 12 crores.
Wow.
Once I find a system, I compare it with the Nifty index, the buy and hold returns of Nifty. If I did not do anything with the Nifty, would that be better? And then if it's passing all the criteria, then I would consider trading that stock. The thing with systematic trading is that backtest results that you see, I assume that the returns are going to be half.
Correct.
And the drawdown is going to be double. So crypto futures work differently than a spot crypto in India. Yeah.
So if you trade crypto futures, there is no headache of TDS and offsetting losses.
No, nothing.
You're taxed as per slab.
Taxed as per slab, you can offset your losses. There's no TDS.
Hi all, welcome to the Strategic Pulse. I'm your host Sudarshan Praveen. In this episode, we have Viram Jain, who is a derivatives trader. Stay tuned and watch the entire episode. Thank you. So hi Viram, thank you for joining us today. For all our viewers who are meeting you for the first time, can you briefly introduce yourself and what you do?
Thank you for inviting me, Sudarshan, for the first time. This will be my first podcast. My name is Viram, and I've been an active trader since the last 10 years. So I primarily trade in the Indian stock market, in the derivative segment, the cash segment, and also commodities.
Okay.
I'm a technical analyst, and I've done my charters in market technician, which is a very prestigious degree in the technical analysis of market. It's on the foremost, like the first.
Right.
So so I'm a research analyst, a trader, and
How did you get started into this? How did you get into the markets?
So 15 years back, I was watching my dad playing with the charts and trading, buying and selling. So I was really intrigued. I asked him, what is this? And he explained me that, this is chart, this is technical analysis, and this is how you buy and this is how you sell. So then he asked me that if I also wanted to do a technical analysis course, to which I agreed. So I had just done my 10th that time. This is 15 years back. So I enrolled for a technical analysis course. And I did, and I loved it that time. And it seemed like, if this is how money is made, then why are people working? Maybe they don't know that this exists in the world. Like this is so easy. So
your dad's a trader too?
Yeah.
Full-time trader?
Full-time trader. Yeah.
Oh, wow.
So he's also a jeweler and a trader both.
Okay.
So he started a jewelry business in 1993.
Okay.
So 30 years back.
Wow.
Yeah. And also a trader.
Okay. So your initial interest picked up from watching your dad trade?
Yeah, watching him trade and watching all those charts and learning the fancy terms like what candlestick chart was and what patterns were, and how you could trade and make money off of it. So it was really fascinating.
So this was intense, and like you mentioned, but with time, how did you eventually cultivate an interest to do it full time?
Then my college started and I had to take a break, obviously. So I wasn't looking at the charts or the markets that time. So after my college, my dad had started a broking company in the name of M3 Multiple Advisory. So he had a broking license also for that. So MCX, NSC, NCDX. So he had licenses for all of those.
Okay.
So I used to go to the office sometimes, and I used to really love, seeing all the activity happening in the office, like those desks and people working on the computers and like buying and selling and calling, and so it was really fascinating. So I thought that once I complete my studies, I would also join this company.
Okay.
But unfortunately, before I could complete my studies, the company had to be shut down.
Okay.
Because of some fraud in the company.
Okay.
By the CEO.
Okay.
Yeah. So, and that was the time when I had just completed my studies.
So what did you study?
I've done my Bachelor's of Arts in Economics.
Okay.
So
from Mumbai itself?
Yeah, from Mumbai, from St. Andrews College, Bandra.
Okay.
Yeah. So for the first 2 years in 11th and 12th, I did science because I wanted to be a civil engineer.
Okay.
And I wanted to get into real estate and construction. But then a few months into it, I was like, this is not me. I can't do this. Like, I'm not getting the, I won't be able to do it. I don't want to do engineering.
Right.
So then I had to choose another field. So I thought I'll just spend these 2 years now.
Yeah.
And then in my first year of graduate studies, I'll switch the course. Then I switched to Bachelor of Arts. And once I switched to Bachelor's of Arts, I wanted to do my majors in clinical psychology. But then as I grew older, I realized that it won't be helpful for my family business if I do clinical psychology. It won't, it won't help me in any way.
Right.
I can do that as passion reading and a passion project, but I can't take it up as, my, what do you say? My livelihood can't depend on it because that'll be a whole another vertical that I'll have to start apart from the family businesses that are already there of jewelry and of stock trading. So then I dropped that plan and I thought I will be an actor.
Whoa.
So then I started preparing for acting. Like I went to acting schools. But then I realized I have zero expressions on my face. Whether I'm happy or sad, you cannot make it out from my face because it's always flat.
That's actually good for a trader. We'll speak about it eventually.
Yeah, poker face. So acting didn't work out for me.
Okay.
Then I thought I'll do something in music because I like singing. But then I was like, again, passion projects.
Okay.
And then, in the last year, so the company had to be shut down and I heard my dad calling my mom and telling her that, this is the first time in my life that I feel that I have lost of all the businesses that I've done and shut down. I have never felt so bad about shutting down a business.
Okay.
But this is the first time that I feel lost, in this.
Which year was this?
This was 2016.
Okay.
I just completed my graduation that time.
Okay.
In 2016. So then of all the confusion that I had about my career, my vision became clear then that what I had to do. My destination was clear. Now I just had to choose my path. Do I want to be a broker, trader, investor? What do I want to do?
Right.
But I want to do something in the stock market and have a company which does something in the stock market.
Okay.
I don't know what, but something.
Right.
So then I started studying about how to trade, what is the stock market. And I started getting involved in trading slowly. So I remember buying my first share on the way back from my last paper of economics. I was in the train coming back from Bandra to King Circle. So I bought Venus Remedies that time for 50,000 rupees. That was my first purchase.
Okay.
Right out of my exam.
Okay.
Because I had already been studying CMT since my second year. So I already had the knowledge of and the infrastructure like a broking account and everything I had already in place.
Okay.
So it was very easy. I just picked up the phone and I bought those shares and I was like, now I'm going to be a millionaire after this. I was just waiting for my time and now I know everything. I know charting this and that and I'm going to do very well.
Right.
So it worked out well, but eventually didn't.
So out of the three fields, like you said, broking was one, investing was second and trading was third. How did you narrow down on trading?
Investing part, I don't have the patience of an investor.
Okay.
And, it takes a lot of time to get feedback, whether you're right or wrong in investing. But in trading, you can get your feedback
immediately,
pretty quickly.
Yeah.
So at least I would know whether I'm right or wrong quickly and so that I can move on or, if I want to stay in the game.
Right.
So trading was more exciting for me and I liked working on leverage.
Okay.
So trading was a better opportunity than investing.
Okay.
And also my trading capital was really small that time. It was 5-10 lakh rupees. So
5-10 lakhs in 2016?
2016.
Okay.
So
and you got this from your family?
Yeah.
Okay.
Everything that I do is my family funds even till today.
Okay.
Everything. We don't do outside funds.
Okay.
Yeah.
So you started with say 10 lakhs of capital in year 2016?
Yeah, I started approximately with 5 lakhs.
Okay.
And then I realized that, this money is not enough for trading.
Right.
Why? Because as a naive trader does, they buy something and if it goes against them, they just keep holding. And I was doing that on leverage.
So when you say leverage, can you explain to our viewers, do you mean derivatives?
Yeah, derivative leverage. So if you're buying something in futures, for example, you don't have to pay the entire amount upfront. You just have to pay 10%, 20% or 30%, whatever are the margin requirements by the exchange. So for example, you just have, if you want to buy a lot of Nifty, currently it's 18 lakhs in value, but you just have to put up 2 lakhs of your own capital. So the rest 80%, rest 90% is, you don't finance it, but you just have to pay the mark-to-market gain losses if there are any, and mark-to-market gains you get credited in your account.
Right.
So for example, if you have a 10 lakh portfolio and if you want to buy Nifty for 20 lakhs, you can do that for 2 lakh rupees just by paying 10% upfront margin.
Right.
So
you directly got into derivatives, or did you try your hands in equity? Like you said, you took some trade out of your college and stuff, right?
Yeah. So those were very small trades, 50,000, 1 lakh, just for learning purposes. So I traded in equity.
Okay.
But then the universe of equity was, there were a lot of stocks to, like there were 1,600 to 2,000 stocks to analyze and then narrow down. So it would take a lot of time for me to decide what I wanted to do. So rather than that, I liked focusing on the FNO stocks, which were only 200 to 250, and they were easily, you could easily trade in them. So liquidity wasn't a concern that time.
Okay.
But eventually, as I grew bigger in capital size, liquidity started becoming a concern in equities.
Okay.
So then I had to totally shift to derivatives.
So when you started with 5 lakh rupees, how was your performance then, and how did you scale up with time?
So there were no rigid rules or classifications of if I'm going to put 1 lakh in this or 5 lakhs in this.
Okay.
Any day, if I felt like doing this, I did that. If I felt like doing that, I did that.
Okay.
And obviously, that wouldn't turn out well because you don't have a structure to what you're doing. So the initial 5-10 lakh rupees was spent just for learning
purpose,
and,
like tuition fees to the market.
Like tuition fees to the market.
Okay.
And the only important part is that you accept the feedback that the market gives you. Like you lost those 5-10 lakhs, but if you didn't learn anything from it, then it is not tuition fee.
Correct. Agreed.
Or if you feel like it was your bad luck because of which it didn't work out, then you're going to lose more.
Correct.
Eventually also, because you did not take ownership for it.
Correct.
But luckily I always learned from whatever I was doing, whatever mistakes I was making, so that I don't repeat those and make newer ones.
Can you share some of your mistakes which you did in your earlier years so that our viewers can benefit from it?
So firstly, leverage was a very big problem because I had a small trading capital and I was trading huge quantity in terms of turnover and value.
Correct.
So with 5 lakhs of capital, you can buy 5 lots. Each lot is 5 lakhs. So I was holding an asset size of 25 lakhs with 5 lakhs of capital. Just a 10%
correction.
Drawdown or correction in the portfolio could wipe off 50% of my capital.
Right.
So that was the biggest mistake which I did earlier, which I did not. I thought that, on 5 lakhs, I'm making 5 lakhs and it's 100% return. So I was thinking only in terms of gains, but not on the other
losses,
side. Yeah. And also, my family suffered a very big loss in 93 during the Harshad Mehta scam that time. So everybody had decided that we won't be in the stock market forever. Like we're never getting into the stock market. At least trading we're never getting into.
Yeah.
So that is why we were into broking and other things, but we won't actively trade.
Right.
And when I decided to trade, it was a huge shock to it wasn't a huge shock to my father because he loved it.
Yeah.
He was okay. But we stay in a joint family, so to everybody else, like you're getting into the stock market as a business, like after having all the other family businesses, you want to get into this, and this is not, this can't be your livelihood.
Right.
You can't depend on it. After 10 years, maybe you would realize that, it's not working out. What are you going to do then? You wouldn't know this, you wouldn't, and you wouldn't be here, you would be nowhere.
Right.
So I accepted that point, but then I still wanted to do it.
Right.
So I continued doing that. Then that 5 lakhs, 10 lakhs was zero eventually in some time. And the reason that I found out was that because I'm trading with such a small capital, I won't be able to hold on to my losses. So I need a bigger capital. If that is the case, then I would be able to survive the stock market. So then I asked my dad that के 50 लाख तो होना ही चाहिए, तो ही होगा, नहीं तो 5 लाख में तो ऐसे नहीं हो सकता. So Baba is like sure. तो मैं बोला हाँ sure. So he put in 50 lakhs.
So do you come from a wealthy family? It seems like 50 lakhs
come from a very well-to-do family.
Okay.
Very privileged family. I've always been very privileged.
Okay.
For everything. Like I've never had an issue or getting what I wanted.
So the reason for me asking you this question was because usually, say when a person is starting out their career and they get 10 lakhs and they suddenly lose it all, right?
Yeah.
The parent is not ready to give further funds again, that to more of it.
Yeah.
So hence I asked you that question. So this was again, so like you said, you lost 10 lakh rupees. Did that affect you psychologically in any manner or?
It did, because before losing that, when I started trading, I thought that I would never lose any money at all.
Okay.
Because I'm so good with charts and I know this pattern and I've studied so much, I would never lose money. The people who lose money in the stock market are just the people who don't know anything about it. And but that's not true. That wasn't true. If money could be made that way just by, learning about charting and technicals, then I think nobody would do any other business in the world.
Right.
Everybody would just start trading.
Right.
So I got face to face with my reality that wasn't the scenario.
Okay.
I could also lose money. So it took a psychological, it took my morale down.
Okay.
Because something I did not expect that would happen happened.
Okay. So was this in one trade or a culmination of a lot of trades?
Culmination of a lot of trades.
Just not and this was in equity or was it in derivatives?
Equity derivatives.
Equity derivatives.
Stock futures.
Stock futures. Yeah. So, like you said, you did stock futures and you lost money there and you decided to start from scratch, and then you approached your dad and then did you decide to change your strategy and do something else with that money? Like instead of futures, would you want to do something else, or with what intention did you decide to re-begin?
So I thought that the strategy was the problem.
Okay.
Which I think everybody always does, which is not true. It is the position sizing and the risk management which was not correct.
Okay.
Even if I wanted to trade derivatives and I wanted to take leverage, I could have done just one lot on my 5 lakhs portfolio. It wouldn't have ever been an issue because my value was okay. It was manageable, but I was trading 25 lakhs and 30 lakhs with 5 lakhs capital. Obviously, a blowout was... It was it was very close. If not today, tomorrow. If not tomorrow, then very soon my account would blow off.
Right.
So then I thought that strategy was the problem. I devised more strategies. I thought if I'm using the RSI this way, I think I should start using RSI this way now. Oh, this was the mistake. I should have done it. This could have been the tweak that time. So I started trading RSI the other way, and I still lost money.
Okay.
I couldn't understand what is the problem. I have such great strategies and they show such good paper profits. Why am I not making money?
Right.
And then I would eventually realize that is the position sizing which is a problem and the psychology which is a problem.
Right.
The mindset. Because I'm involved with the charts all the time and I'm on the screen and I'm looking at the M2M going up and down, the mark to market profit or loss all the time.
Right.
It affects your psyche.
Right.
And then you end up taking a very emotional decision.
Right.
You might have thought that you are entering for XYZ reason and you will exit at XYZ reason, but seeing that mark to market, I don't know what happens. We end up doing completely different things than what we had planned.
Right.
So then I thought that strategy is not the problem.
So
what should I do now?
Yeah.
Like I'm stuck now. So then I thought that 50 lakhs is not enough capital to trade.
Oh.
So I think we should have 5 crores.
Okay.
So then it'll be easier to trade derivatives. So what will happen that today I can only trade 5-10 stocks, and that is why if I get stopped out, I don't get a good trend. But if I have 5 crores, maybe I will be able to buy at least 100 stocks and something would work out, and then eventually one would pay off for the other and I would be okay doing that.
Right.
So I planned my strategy that way. Then now I will participate in 100 stocks.
And you could arrange 5 CR capital.
Yeah, so I went to my dad again. That
okay.
I think this is not enough. I think 5 crores.
And this was which year?
This was 2017.
So 1 year after, just to summarize, you lost 10 lakh rupees.
Yeah.
You asked for 50 lakhs. And did you make some money there or?
50 lakhs, it was very wild swing. So I started my company in 2017 in the name of Myriad Funds.
Okay.
So in the first year, I made 50 lakhs with 50 lakhs of capital in 50 days.
Okay.
So we were really happy that 50 lakhs in 50 days, if this is the run rate, then I would be at 3 crore 65 lakhs in a year. And I started calculating and multiplying everything like that. So I went out and I bought a car also. I bought a Jaguar.
How old were you?
I was 21.
Okay.
22.
Okay.
So I went, so I told my dad that we need to buy this car. And, if this is how it keeps going, then it won't be a problem. We'll pay off the EMI. It's not an issue. So we went to the store. He's like, you want this model, but I think you should get the better one. If you're buying, if it's the first luxury car of the family, then you should get a better one. So we bought the better one.
Okay.
And then I lost those 50 lakhs in the next 3 months. Now my EMI is going on. I have the car in my hand and I don't have any money.
Okay.
So then I was like, I'm stuck now. What should I do? Car is here now. There's no second thoughts about it. Can't even sell it because it'll be like 30%, 40% loss right away.
Right.
So car is there now. Expenses have also started. Earlier there were no expenses, family capital. So interest was just a notional expense, but not a real, outflow.
Right.
So then expenses also started, and that time I got engaged.
Okay.
When I was 22.
Okay.
21. Okay. I got engaged. So then I thought that if I'm getting somebody in my family now, and I don't have a stable source of income,
right,
and I'm such a big failure right away. Like I started and I failed. This was so bad. So how am I going to get that woman in my house? And how is my life going to be? This can't be my source of income, and this can't be my business. I want to shift to something else. But then I thought, let's give it another try. Okay. Let's devise newer strategies, meet other people in the similar way of trading that I do, like futures and options, and companies with market cap about 25,000, 30,000 crores. So let's meet people who are doing that. So we met a few people. One of them was, I can't name him now. He belonged to a very big housing finance company based out of Mumbai. So we met him through my father, and we both went for the meeting. I saw his office. It was on the 12th floor and 5,000 square foot, all glass walls. And I was so fascinated. There were hundreds of traders trading there, and I was like, I want to be this. I want this. Like, I want to reach here, and I want this office, and I want to sit where he is sitting. So it came, as a motivation or as an inspiration that I want to do something big now.
Okay.
I was thinking of quitting the profession completely, but now I want to do something 10x from what I was doing. So we decided on the commercials, and we bought the telecommunication stock at 30.
Okay.
I bought that stock. Pre-story, I infused 5 crores of capital first, and then
you already had 5 crores before, right? There's another 5 crores.
No. The 5 crores, the first 5 crores. So I put my house on LAP, loan against property. I took a loan against my house.
Okay.
And this was the last source that I thought that now after this I won't get any more money.
So you mortgaged your house?
Yeah.
To get
funding for trading capital. This is the riskiest thing that somebody can ever do. I don't recommend it to anybody.
Right.
In their sane mind to do it.
So I was under the impression that you further went to your dad and you asked for further 5 CR and he got it.
So we arranged it in a way that we kept our property papers and got this capital.
Okay.
Yeah. So it was my own house that I was living in.
Okay.
So I had to be more responsible with the money because now the house is on the line.
Correct.
If something goes wrong.
Right.
But now the capital is in the account. Now we have to decide what to do.
Right.
We're not sure, like the strategies that we were doing weren't working out that well. So now we're meeting new people to know that, we have this kind of corpus. What should we do with it?
I must say you have a very supportive father.
Very, very supportive father.
Yeah, because I think by this time, any other kid and their father would go.
Also he loves this profession.
Okay.
He loves charting. He loves trading. In his 24 hours in a day, if he's sleeping for whatever time, 20 hours he's on the screen.
Okay.
If he's up 20 hours he's on the screen charting.
And how does he manage his jewelry business along with this then?
So that is on autopilot right now. So it's all staff handled and so it runs that way. So even if I go there, there's not a lot of value that I add by going there. So it's just sitting there because I have to sit.
Right.
So I did not join that and I got into trading.
Right.
Which I thought would also be a good thing to give to my father after shutting down that company, and it will be, he will also be happy that we've not lost, which he told my mother.
Right. So you're saying you started buying this telecommunication company? Yeah.
So we bought this telecommunication company, and we bought a lot of shares. So at 30, I think we bought 20 lakh shares on leverage, approx 6 crores.
Okay.
The entire portfolio plus a crore. It came down to 20 from 30. He went to that guy, we asked him that it has come down to 20. We're losing 33% on it. What do you think now? Are we we're on the right train, right? This is not a problem. So he said, see, at 30, it could double. Your capital could double. But at 20, now it's going to go 3 times from here.
Okay.
If it reaches 70.
Okay.
So we were really happy. We were like, makes sense. From here, it's going to triple now. So we bought 20 lakh shares more.
How? But your capital is over, right?
It's on leverage you can buy, right? You just have to pay 20% for futures. So it was there in futures. You could buy at that time.
Okay.
So now I have a position value of 40 lakh shares at 25 rupees average price, approximately 30 and 20 at 25 rupees approximately. Went down to 11.
Okay.
Now we don't know what to do.
Okay.
And eventually we were left with last 1.5 crores or something of the 5 crores. And this was in 2019.
Okay.
So 5 is now 1.5.
So you have basically lost the
70% of the capital. So now to reach back to my break even, I need to go up 3 times from here.
Correct.
And it is not as easy as it's thought that going 3 times from here,
it's absolute madness.
Can't do it within a few years.
Yeah. And you had also put your house on mortgage.
Yeah.
So there's added pressure.
That was an added pressure, and this is the last source of funding. This is the last 1.5 year that's left, and after this I have to quit.
Right.
Can't do anything else. And in all of this, I was always focusing only on the strategy first. Then I was focusing on tips and rumors, but I was never focusing on position sizing. Even if I followed that tip and rumor and the position size was kept to a decent proportion of my portfolio, I wouldn't have blown up 70% of the capital.
Okay. Can you elaborate on position sizing further for our viewers?
So for example, if I had 500 rupees, I bought for 900 rupees. Should have just bought it for 100 rupees. The rest 400 you can do something else with.
Okay.
10% of the portfolio, 20% of the portfolio if I'd bought. Even if it went to zero, my portfolio would only go down 10%.
Right.
It wouldn't wipe off completely.
Right. So you're basically spreading your capital across.
Okay. Yeah. So 10% could be tips and rumors, 10% could be my own strategies, 10% could be news, 10% could be just because I like it.
Right.
Anything.
Right.
So if I spread it out that way, it would never be an issue.
Right.
And at a smaller capital, things are easier to manage because you can double down very quickly. At a larger scale, it's very hard to double down because you have to source funds again.
Absolutely.
So for 5 lakh portfolio going down 50%, I can put in 5 lakhs more.
Right.
Somehow it can be managed, but at a bigger,
it's difficult.
Absolutely. At a larger scale, it's not possible. Also, getting those kind of returns and liquidity is not possible.
Right.
So if I wanted to trade in cash equity and if I wanted to buy something for 5 crores straight up, it takes a lot of days to buy that. In most of the counters, there are only 300 to 400 counters which are very liquid,
right,
where you can buy 50 lakhs or 1 crore worth of stock quickly in 5 minutes.
Right.
That is also one of my filters which I use.
Okay.
So which is the 5-minute moving average of the volume for the last 1 month. It should be, the turnover should be above 5 lakhs at least.
Okay, yeah, we'll definitely get to how you trade eventually.
Yeah.
We can continue with your story of you.
So now it's 2018. I stopped trading 2018 or 2000, yeah,
19
mid
you
2000,
mentioned.
yeah, 2018 it started. 2019 I stopped trading. 1 year I was just focusing on learning, and
From 19 to 20.
19 to 20 I was just focusing on learning.
Okay.
And unfortunately I joined the markets back in 2020 at the beginning in January.
Okay.
So right before the crash.
Okay.
So I came in again with all my capital,
And
that now
so
I'm prepared.
This is 1.5 CR only? Or
Yeah, 1.5 CR.
Okay.
1.5, 1.7 something.
And how
But
did you manage the interest payments and all? Your family was taking care of it?
yeah, like the jewelry business, or we could pay it off from somewhere.
Okay.
So it wasn't a huge problem.
It was not a tough time for you all financially that time?
No.
Okay.
Yeah. So then in 2020 I started, but luckily that time I followed a strategy which is called the long and short strategy, which a lot of hedge funds use in their portfolio. They're going long on one asset and short on the other asset.
Okay.
So I had bought TCS, HDFC Bank and Reliance long and Nifty short. And the markets crashed that time, and these three stocks did not crash as much as the Nifty did. So it was not a bad time for me. In fact, I made some money on that. But that time I realized that I don't want to do discretionary trading anymore.
Okay.
I don't want to be involved. I don't want to feel smart that I made a very smart choice and I know it all and I make money because of me. I want to go to a systematic approach which is non-discretionary. I don't want to have any discretion. The only discretion that I have is in making the system, not trading. I don't want to be a trader. I want to make a system in such a way that if I give it to anybody, they can trade it.
Got it.
I will give them the position sizing, capital allocation parameters and the system, and you trade it. It shouldn't be that if I am not there on the screen, this trade can't be done. I don't want that. I don't like it. So I changed my approach to non-discretionary trading. Then we developed a strategy. Now we only have 1.5 CR or something odd left. So now you have to look for something which will give you good amounts of leverage in that amount. Okay, so the only futures, contracts that give you that kind of leverage are the index futures. So it will be Nifty and Bank Nifty. There were only two that time, Nifty and Bank Nifty. It wasn't like there weren't Fin Nifty. There was no Fin Nifty. There was no Sensex futures. They weren't there. There was no mid cap futures. Only Nifty and Bank Nifty.
Right.
So I had to choose between both of them. Nifty I never liked because too slow, trend following, a lot of rollovers, and I did not like. Personally, I even find it very boring to trade the Nifty because it's so mature, and so I chose Bank Nifty, which is like a bull. It's very aggressive. It can go in either direction, very wildly. So I chose Bank Nifty. Then I developed a system on the Bank Nifty on intraday time frames. And it worked out. I went to my father. I told him that this is the system, Excel. I showed him the Excel, and then he was like, "Okay, I'll go through it, and I will also try to find out what else can we do in it."
Right.
This is one that you've made. I'll make a few combinations of this, and then we'll select whichever is the best combination, and we can start trading in that. And so the good thing always is that him and I always invest in the best infrastructure available. We'll have the best computers, the best Wi-Fis, the best softwares for trading, charting. Always even if you're not using it, we'll always have it with us.
Handy,
we'll always have it with us. So that time the software that we were using, he went to another software and tried the same strategy on different parameters, which was easily, back testable. So he found a lot of other combinations also. He's like, these combinations are working better. We should start trading this. He started trading that. And luckily, it started working good for us.
Okay.
And then we started making more, and he started making more and more developments in that strategy. And I started executing them on a day-to-day basis. So our job was that he would make changes and I would execute those changes. So our entire day was spent like that. I would spend 9:15 to 3:30 on the computer trading. And after that, he will give me the Excel and everything that these are the changes that we have to make. And the next morning, I will make those changes. And again, he will do the research.
Got it.
So this was our
camera as a team
setup. 2 people team. Then we will do it this way. So then luckily Bank Nifty gave me a lot of leverage, only 10% margin. So I could trade 10 times of my capital value. So for example, if you have 1.5 CR, you can trade for 15 crores in Bank Nifty if you at a 10% margin, plus mark to market losses obviously you have to account for. So then the first year went really good. We took a lot of leverage, so that system returned 30%, and we were trading at 3 times leverage, so approximately 4.5 to 5 CR we were trading, and at 30% it gave me 1.5 CR over 1.5 CR, so my capital doubled.
Wow.
Now I had 3 to start with in the next year, and then consistently it gave me 25 to 30% a net return.
Okay.
My gross returns were 45 to 50%.
Okay.
But I paid almost half of my profits in STT because we were trading so much at such a huge volume, STT and all the other transaction charges. So yeah, every year it gave me 25 to 30% return, and in the next 3-4 years the capital turned from 1.5 CR to 12 crores.
Wow.
Yeah, and it's now today that we're trading with that kind of capital.
Okay.
We have 12 crores invested, and we can trade for 25 to 30 CR, even more.
So 12 crores your personal capital, but with leverage you trade with around 25 CR.
Yeah, but around 25 crores.
Okay. Wow.
So, yeah, and the systems that we started in 2020, now they have started maturing. So in the last 1.5 years, they haven't returned that much. In fact, they're not working very well.
Okay.
So now I'm back to square one, like I have always been every few years.
Okay.
And now to think from scratch now what I want to do with my capital and how am I going to trade with that money.
Okay.
So slowly we're scaling out of Bank Nifty.
Okay.
It has matured, and I don't see a lot of movement that I saw earlier in Bank Nifty.
Right.
So I may be shifting to crypto or mid-cap Nifty.
Okay.
And we'll devise something in that.
So this scale of 1.5 with leverage, and you came all the way till 12 CR. Can you explain in simple terms exactly what you did in terms of trading? That because if viewers hear this, they'll be like, "What's happening?"
Yeah. So it was a non-discretionary system, basically
Algorithm-based trading.
Algo-based trading, but indicator. But I would execute the orders myself.
Got it.
I would.
So you had certain rules to take the trade.
Yeah.
Right? So
it's indicator-based trading. Basically,
trading.
in simple terms, you could say that I have a moving average system. For example, price closes above this moving average, I buy. Below this, I exit.
Right.
So this is the trading system. Now you find out how much money you need to trade that amount, what will be the max drawdown in the account, and for that you keep the M2M losses, and then you start trading that system.
Okay.
So now whenever I would get a trade, I would not think about it whether I should buy or sell or take it or not take it. I have to take it. So like a robot, I traded for 4 years.
Okay. So you developed a system based on indicators, and to ensure that this system actually works, you backtested it.
Correct.
Using a software.
Correct.
And in the backtesting, you got results that this will generate some kind of returns with this kind of drawdown and stuff. So you had a fair idea of how it will perform.
Correct.
And then you eventually put in your actual capital and you started trading this for 4 years.
Right.
And you did this in Bank Nifty derivatives.
Bank Nifty futures
Bank
only.
Nifty futures.
Yes.
So this was already a leverage instrument, and you could through the capital you could trade much more.
Yes.
Okay, so and this worked out in your favor, and you could generate this kind of returns.
Yes.
Okay, wow.
So at leverage, if you see, at a 2 times leverage, if your account is giving you 20% profit on the total value traded, at 2 times leverage, it automatically becomes 40%.
Right.
And if it goes down 20%, it automatically wipes off 40%.
Yeah, leverage is a double-edged instrument,
Double-edged.
so you can take it either way. Yeah.
Yeah. So once you're sure about what you're doing and you've planned your finances that way, I think leverage is a very beautiful thing to use.
Okay.
Yeah.
If used rightly, yeah.
If used rightly. So,
okay. So, but in terms of how you take those trades, and how did you finally decide, that you want to do indicator-based trading, and what was the thought process? Like, how did you narrow down on this?
So in non-discretionary trading, this is the only thing that I knew. Indicator-based trading.
Okay.
I did not know quants. I did not know statistics, like how Renaissance technology operates. I did not know those systems. So indicator-based trading was the only approach that I knew, and I backtested it. And I bought a lot of data, intraday data, for the last 18 years, since 2007. I bought that data, intraday data.
So just to clarify, you used to trade only intraday?
So the systems were on intraday time frames, but the trades could last for 2-3 days, 5 days also.
Okay.
So it's not like when the market is shutting, I have to square off my position. It's not
so
like
you were a positional trader, but
positional trader. Yes.
The trades used to come intraday as well.
Yes.
And what time frame used to use this for?
I used to use 15 minutes and 1 hour.
15 minutes and 1 hour.
Yeah.
Okay. Yeah. Okay. You were saying something.
Yeah. So now those systems have stopped working. They don't work that well because there's not a lot of margin left. Earlier, when I started trading the bank nifty system, my average trade was 0.25% per trade. But now it's come down to 0.15%. So after all the cost, transaction costs, STT, GST, there's not a lot of juice left in it.
Right.
So now I'm looking for better opportunities where I would be able to scale this in the way that I scaled Bank Nifty.
Okay. And this indicator was, there are various indicators, right? So this was based on which indicator?
So I've used all sorts of indicators in this.
Okay.
I have 7 trading systems, all on Bank Nifty. So the major indicators that I use are VWAP.
Okay.
Bands to VWAP, channels to VWAP, Bollingers, RSI, and MACD.
Okay. So culmination of these 7
culmination of these 7. So the indicators would generate a signal and the VWAP would confirm. And once I have that symphony, I would trade.
Take the trade. And you did this manually for 4 years and gave this kind of returns in futures?
In futures.
Wow.
Yes.
It's quite gutsy.
This was the last attempt.
Right.
Didn't have anything to lose. I've already lost what had to be lost.
Right. So, very, very unique and interesting and different kind of story. I mean, usually when I speak to other traders, so because I'm also a full-time trader, they advise to not take leverage. They advise to take it slowly scale up. But from what I'm hearing from it, the journey has been quite the opposite. But thankfully it worked out in the last.
Thankfully it worked out. But I think if you know what you're doing and your risk, if you have proper risk management in place, leverage is not an issue.
Can you emphasize more on risk management?
Risk management particularly would be position sizing, how much you're putting in a portfolio. So for example, the systems that we backtest, we see what the drawdown was in the entire history.
So like for someone watching this podcast, and if they want to do something similar to what you're doing, so can you like walk us through step by step exactly in terms of artificial figures only, in terms of percentage terms ki itna drawdown theek rehna chahiye itna, just to understand how to go about this process.
Okay. So what I do personally is the average, I compare the draw. I have a system on Nifty. For example, I would test the same system on Nifty. I would see the drawdown on Nifty and the return on Nifty. For example, Nifty is creating a return of 10% with a drawdown of 10%. Okay. I would need the stock to perform twice as better as the Nifty if I want to participate in the stock, because the stock is going to take me twice the margin with twice the drawdown.
Okay.
So if my risk to reward is matching with the risk to reward profile of Nifty, I would consider that system, not start trading it, but now it's in consideration that I might, this can be a system that I can trade. So yeah, I just compared the risk reward with Nifty, and also I compared the risk reward with buying Nifty and not doing anything, or buying mutual funds and not doing anything.
So you were trying to understand the alpha returns which you would generate.
Yeah.
Okay.
So how much better is it if I if I put my time and trade a stock rather than just holding Nifty?
Got it. Okay.
Yeah. So for example, if a stock has a drawdown of 20% and a return of also 20%, but it requires twice as much capital to trade the stock than the Nifty, I would always prefer trading Nifty twice as much to get the same return.
Correct.
Because of the volatility aspect, because of diversification benefit of the Nifty 50 index, there can be any kind of news which could be particular to the stock or the industry that the stock is operating in. For example, when Yes Bank crashed 30% in a single day, I was holding long positions in it on 21st September 2019, but I had put positions against it, so it was offset. But if I did not have that kind of position, my portfolio would be ruined because of such trades. So stocks inherently stocks are inherently very risky. They're riskier than the index for sure.
Agreed.
So if I'm trading in the stock, I need to have that kind of what do you say? I need to have that kind of reward for trading the stock.
Right.
For taking that kind of risk.
Right.
Bearing the overnight risk of the stock opening 30% gap down tomorrow.
Right.
There should be some kind of reward for me to trade that. So once I find a system, I compare it with the Nifty index, the buy and hold returns of Nifty. If I do not do anything with the Nifty, would that be better? And then if it's passing all the criteria, then I would consider trading that stock.
Okay. And presently, but like you mentioned, you were trading Bank Nifty futures so far, and were these hedge positions or were they naked?
They were all naked positions.
Okay.
Naked futures, long and short. It was a long and short strategy. Either I would be long in the market or short in the market, never out of the market.
Okay.
So 365 days I would have a position.
And like, of course, you were making money through this and it worked out, but there would be interim periods, right, where you would see a drawdown or you would see a big loss. So how would you... what were your emotions that time and how did you handle them? So
I had seen that the system would draw down approximately 20 to 25% in the back test. So I was prepared for 20 to 25%.
Okay.
And the thing with systematic trading is that back test results that you see, I assume that the returns are going to be half.
Correct.
And the drawdown is going to be double. If with that I can survive, then I will trade that system. So for example, I've already seen 20 to 25% drawdown in the Bank Nifty back test. I'm assuming a 40 to 50% drawdown when I'm actually trading it because of the transaction costs or missed trades or anything, slippages, anything.
Right.
Or a huge gap up or gap down, which you cannot execute. If the market is at circuit, you can't execute like in 2020. So there will be a huge slippage in that. So once I've seen that kind of drawdown on papers, if I see it in real life, I don't move that much. But if it is more than twice the drawdown that I saw on the paper, then I have to reconsider. So I saw a lot of drawdowns in this period in the last 4 or 5 years when the Bank Nifty, when the system corrected 20 to 25%, when the Bank Nifty was making all-time highs. So I thought that if I had just bought and held it, I didn't have to do anything. It was anyway going up and I'm losing 20% on this. But it was on the papers anyway, so I was expecting that.
Okay.
Yeah, so it was fine for me to take it.
And this 12 crore portfolio which you have you invested this somewhere, say liquid case, and pledged that to trade, or it's all in?
So yeah, half of my portfolio is in Nifty ETF.
Okay.
Against which I used margin.
Okay.
So the Nifty is already returning 10 to 11% per year, and even if I make 10% more on my trading, it still gives me a good 20% CHR to my portfolio.
Okay. And I'm sure, I think within this period you would have paid off your house loan and car loan and probably all those things.
Yeah, it's been many years now, so
yeah.
The house loan I still haven't paid.
Okay.
Because I love using debt and leverage.
Okay.
If I have more houses, I will put them also on loan against property and use that.
Can you explain how does this work? Say the house value is 5 crores, for example, or 10 crores for ease of calculation.
Yeah, if the house value is 10 crores, the bank valuer would come and they would value the... So one is on paper how much is the value of the property, and one is how much was the last transaction in the building.
Correct.
Okay, so it usually differs. So on paper value is sometimes
lesser.
A lot of times lesser.
Right.
Okay, so the bank comes and values the property at whatever price, and they give you 70 to 80% of the property value as a loan.
So say you get 8 CR as loan.
8 CR
and
as loan.
Usually at what rates of interest do we get this at?
Very nominal 9%, 9.5% loan against property.
Okay.
Yeah. So currently what I have is at 9.5%.
And how do these repayments work? Monthly? Or?
Yeah, so they work in monthly installments, and they have a fixed tenure, and in that tenure you just have to...
But doesn't this add pressure to make money and trade and to return back this amount?
It does if you're expecting consistent returns in the market. I don't expect consistent returns. I know and I believe that stock market returns are very lumpy.
Okay.
So you cannot have 2%, 3%, 5% every month, and it could be 2% this month, 10% down the other month, 20% up the other month, and eventually at the end of the year you would know whether you've made money or you've lost money.
Okay.
So, but the EMI is constant.
Right.
You have to pay it.
Yeah.
So if you're not making money paid out of your capital.
Okay.
Yeah.
So you would track on yearly basis, but you would keep certain amount of cash flow separate so that you could take care of all of this.
Yeah. So half of my portfolio is in the ETF, half is liquid cash with the broker. So if I have any commitments, then I can pay it off from there.
Okay.
It doesn't take a lot of time to withdraw money, so it's fine.
And so this was so entirely in the last 4 years you've been doing futures trading.
Only futures, yes.
And you mentioned during a podcast as well that you're trying to enter crypto.
Yeah. So I recently started trading crypto futures.
Okay.
On Binance.
Okay.
So which is an international exchange for crypto, and which I personally feel is safer than all the other exchanges. So
can you shed some light on crypto, the taxation, the regulatory aspect of crypto, and how can one go about it?
So if you're trading coins in India, with coins as in like full investment Bitcoin or full investment Ethereum or whatever, so there is a 1% TDS on the transaction, which is deducted at the time of the transaction, and you cannot set off your losses at the end of the year. You cannot take any expenses which you have incurred for trading, and all the gains would be taxed as taxed at 33% or so.
So isn't this like not very lucrative for traders to enter?
Yeah, so if you're trading like spot crypto, then not. But futures is completely different. So spot futures, so the spot trades come under the VDA agreement, which is the Virtual Digital Asset Agreement. So which has all these rules of 1% TDS and no offsetting in losses. But futures is completely different. Futures is treated as business income, speculative income, and it is taxed according to your tax slab. And you can offset your losses.
Oh, I'm not aware of this.
Yeah. So crypto futures work differently than a spot crypto in India. Yeah.
So if you trade crypto futures, there is no headache of TDS and offsetting losses.
No, nothing.
You're taxed as per slab.
Taxed as per slab, you can offset your losses. There's no TDS.
Oh.
Yeah.
Okay.
Because that is speculative income, and yeah.
Okay, so
it doesn't come under VDA.
Okay. Wow, this is a good point. So you do so crypto futures is something which people can explore then.
Yeah. If you want to trade, then crypto futures is what people can do. The margin rates are also very low. For example, if you want to buy Nifty, you have to pay 10% upfront margin. For Ethereum, Bitcoin, it's 1.5%.
Okay.
As low as that. So you can get you can even do it for 200 times leverage, which is 0.5% margin.
Okay.
In India with certain brokers. But I wouldn't recommend those brokers, Indian brokers.
So you would recommend Binance?
Yeah. Indian exchanges I wouldn't recommend because I've had a very terrible experience with a few of them. I wouldn't name them.
Okay.
Yeah.
Okay, so and have you been trading crypto for a while, or are you just entering?
I just entered 6 months back.
Okay, and how's that going?
It's going very well. So the strategy that we're doing on crypto is called grid trading strategy.
Okay.
So in grid trading, for example, you set a pivot point which is 100 rupees, and you say that every time it goes down 1%, I will keep buying, and every time it goes up 1% from where I bought it, I will sell it.
Okay.
So you're basically a market maker in that, like how market making works. So you set a certain grid like from 100 to 50. Every 1 rupee down I will buy 99, 98, 97, 96. The one that I bought at 98 would exit at 99. One that I bought at 99 would exit at 100. So you trade the entire grid all the time, assuming that the asset price is not going to go anywhere eventually.
Okay.
Which I think is going to be the case with crypto for the next 2 years.
Okay.
So I'm not expecting crypto to go up from here.
Okay.
Not expecting it to go down from here.
Okay.
But
so
it'll just play around in this range, 20%, 30% range.
Okay.
20% up, 20% down, 30% up, 30% down.
So again, you do this in futures.
Only futures.
You buy futures, you sell futures.
Yeah. So I've set an automation bot for it.
Okay.
So I created that with ChatGPT.
Okay.
Yeah. So on AI, you can create a trading system. You just have to write down that give me a Pine script trading system with these requirements, and go paste that code in TradingView.
Oh.
Okay, and then TradingView will connect to your broker or your exchange through a thing called webhook, and it will automatically start trading.
So this is all basically done algorithmically. You don't have to do anything.
No, I don't have to do anything because it runs 24/7, right? So I can't look at it all the time.
Yeah. And how much capital have you allocated to crypto?
25 lakhs currently.
Okay. And in last 6 months, what kind of returns have you seen in that?
So currently the asset price is down 30%. So I'm not seeing any gains as of yet. My portfolio is at the same price, which is a great indication that I've churned so much that even when the stock price is down 30%, I'm still at break even.
Right. Okay.
So if it recovers, it goes back to my buying value, I would see a huge gain.
Okay. And this is, you use Binance. And what about for your Bank Nifty futures, derivatives, equity trading? Which platform do you use?
I use a couple of platforms. One is Profit Mart Securities, which was our own company, the stockbroking company, which I mentioned earlier.
But didn't you mention that it
was M3 multiple? We shut it down. We sold the card to Profit Mart.
Okay.
So it feels like home, that company.
Okay.
So Profit Mart Securities, Kotak Neo, Dhan, and Angel One.
So any specific reason to choose these brokers?
I wanted to check all of their APIs and their latencies for executing the trades. So,
but don't you execute manually?
Manually. So I execute in one account manually, and then I use a copy trading software which copies those trades to 10 of my family accounts.
Okay.
Yeah. So I have a partnership company, I have a private limited company, and 8 other family personal accounts, 3 HUF accounts.
So all this is for taxation purpose?
Taxation purpose, yeah. So
can you emphasize on copy trading exactly how does that work?
So you have to set up a master account. For example, you will set up a master account in your name, and you would say, and you would link all the other child accounts to that master account. Whatever trade happens in your account, you can set a ratio that I want 1:1 in this account, 1:5 in this account, 1:10 in this account. And accordingly, whenever you fire a trade, it'll automatically get copied in those accounts within, I think, less than half a second.
And this is which software?
I use Algo Delta.
Okay. Yeah. Algo Delta. And how much do these softwares usually cost?
They don't cost a lot. They're 500 rupees a account types per month.
Per month. Yeah. So into number of months you use it. And does this work on Windows and Apple, everything? Or
Yeah. So it's a web-based application, web-based, what do you say? It's software. Like TradingView software. So
anybody can use it by scanning. Okay. Rapid fire questions for you.
Okay.
One rule you will never break in trading?
Position sizing. I've learned it the hard way.
That's true. Capital protection or aggressive growth? I think I know your answer, but
I think both. Initially capital protection and then aggressive growth. Once you've learned how to, it's more important to defend yourself in a fight than attack. Because if you're a good attacker but you can't take a punch, then there is no point of your attacks.
Right.
So capital has to be protected first and then attack.
What is considered as a good ROI or a CAGR for a full-time trader?
I think it's very subjective. I would take 25 to 30% per year and participate in the stock market.
How did you derive this percentage return?
So Nifty returns multiplied by 3 times would be a good starting point for me to take that kind of risk to trade in other stocks.
Okay. Yeah. What's harder, making money or protecting it?
I think protecting money is harder.
Okay.
Because you can make money in a lot of ways. It's harder to keep it.
Right.
Yeah. And every time you make money in the stock market, you always feel like ये पैसा तो आया हुआ है, it's okay if I risk it. ये तो इससे ही बना है, so it's fine even if I risk it. Right. And then you eventually end up losing it. But if you consider your profits as tomorrow's opening capital, then you wouldn't make those mistakes. So keeping money is harder.
Okay.
We usually tend to throw it away.
So this almost brings us to the end of the podcast. Would you like to share something additional to our viewers which may add value, and especially focusing on those people who aspire to become full-time traders?
I would like people to start with mentors first.
Okay.
And then go on YouTube and read books, because it will fasten their process. So find any kind of mentor, like whatever you're planning. If you're planning to trade equities, look for people who are teaching how to trade in equities. Get an introduction to it. you don't have to learn strategies from there and start executing, but you have to learn how the industry works, what are the softwares that they use, how do they approach trading, what kind of instruments are they trading in, equities, derivatives, currencies, commodities, what are they doing. So once you get the knowledge of it, then you can start reading books and reading strategies, and then you can go for a charter, which is CMT, if you're interested in refining your knowledge.
Does that help CMT?
I think it does help in a way, because it will systematically teach you everything that has to be learned. So for example, if I wanted to start today, I would just go on YouTube, or I would Google that, stock market courses or indicators. Then if I had to learn, if the course is in the fashion of A to Z, I would start at A, then go to Z, and then go to M, and then go to R. So I will learn it in that way if I'm doing it without having a structured course curriculum which the CMT provides.
Okay.
I would learn everything in an orderly manner.
Okay.
Yeah.
So thank you so much, Viram, for taking the time and joining us today.
Thank you so much for calling me.
Thank you. Thank you for watching this episode till the very end. If you found this episode to be valuable and insightful, then please like, share and subscribe to our channel, and let us know in the comment section below your takeaways from each of our episodes. Thank you.